What's up, everyone? This is Andrew here with your business breakdown, giving you the major business news and events this past week. So to start off with, we have some information about the Dow Jones Industrial Average. It just hit 30,000 for the first time. Woo! So why is this good? Why is this great? Well, it's an all-time high. It's a record high right now. People are doing well in their retirement accounts. Anybody that owns stocks is doing well. Looking at a closer look at what actually occurred here, this is during the year where we have this pandemic, and we had the Dow down 37% at one point. And now, before the year's over, before December is out, it's already hitting a new all-time high. When it hit Dow 20,000, a lot of people got the Dow 20,000 baseball caps that they were wearing. I saw some of those going around again on the news where they have Dow 30,000 now. The Dow first hit 20,000 back in January 25th of 2017. And it's taken this long to get to the new record, so about 3 years there. And that's a 50% increase in just 3 years. That's pretty significant right there. That averages 16% per year that the Dow Jones has supplied here. And if you look at where we are from the beginning of the year till now on the Dow, because we had that large drop from the pandemic, it's currently up only about 5.4%, which isn't that significant there. If you look at the S&P 500, that one has actually increased around 13% for the year, so that one's doing significantly better. But also breaking down into what's going on here with the stocks that make up the Dow Jones Industrial Average with the 30 stocks and everything, but let's look at the top companies. And you look at where we were when the Dow was at 20,000 compared to now, and which stocks have had the highest cumulative return. Let's look at the top five. You had Apple with a 278% return, Microsoft 236%, Salesforce 232%, Visa 150%, and Nike 150% return on those between Dow 20,000 to Dow 30,000 in 3 years. Now, what were the worst performers out of the Dow? Okay, well, we have Walgreens with a loss of 53%. We have IBM with a loss of 30%, Chevron Energy Company with a loss of 18%, Goldman Sachs, didn't think that one was going to be on there. You would think Goldman Sachs always makes money, but they actually have a 0% return over that period. The same thing with the company 3M, also a 0% return over that period. Now, why is this stimulus well, it's happening because of this stimulus, right? Why is the Dow hitting all-time highs while we are in the midst of a pandemic? A lot of stimulus is going around. Federal Reserve is also supporting markets. And looking at this, I saw another interesting statistic here. If you look at what the Fed has been doing, they've been doing their purchases of bonds, and they're actually buying a large amount of the U.S. Treasury debt outstanding. So before COVID started, they owned 9.3% of the total bonds outstanding. Now it's 16.5%. That's a huge jump there, just with a couple months there dealing with this pandemic. So what they're doing here, and what they want to say in the Fed minutes that they're not doing, is monetizing the debt. So they're basically buying U.S. Treasury bonds through their open market operations, and when they take that Treasury bond from the U.S. Treasury, they're using that to put credits onto the accounts at the Federal Reserve banks, and that increases the money supply in circulation in the economy. So it's given a way for the federal government to spend more money that they don't necessarily have. And to avoid going into all the little details, you can research this more on your own if you'd like. And also, when the debt finally comes due in 10 or 30 years, the Federal Reserve actually just gives that money back to the U.S. Treasury because of the system that we have set up here. So you have to look at more details on that. But it's just crazy that when you're seeing them purchase so many bonds and the effects of that, and now we're seeing, inflation in terms of the Dow hitting all-time highs during a pandemic, it's pretty interesting correlation there. We also see that some of the companies now, this is an important factor to know, when are we getting out of this economically? When is the pandemic over, and when are we going to get on with our regular life? Well, you have the number of companies in S&P 500 that cut their dividends back when this pandemic started. There was a total of 42 companies that said, no, we got to cut this dividend. We can't afford to pay this out during this recession that's coming up here. Well, now, it seems like the pandemic's this is actually the official resolution of the pandemic here. We have 3 vaccines that have been announced that are on the way, and people have gotten to the point, we've done lockdowns, we've done masks, we've done a lot of different things, that social distancing and closing different areas of the economy. At this point, people are just kind of done with that, and they're moving on, and we're going to live lives as people live their lives, and we're going to have the vaccines coming out. So there's not really much else we can do to create a giant change in that at this point. And you're seeing companies that have now adjusted to this new structure and with the potential for, a kind of a post-pandemic situation. So 6 of the companies of those original 42 have now stated that they're reinstating their dividends. They're going to be paying those out again. They feel comfortable enough in the economy to pay out dividends once again. And there's also a handful of other companies that gave a timeline that they're going to announce if they're going to, start putting the dividends back. So that's some really good news right there. Along with things hitting all-time highs, we have some information from the man, the myth, the legend, Elon Musk. So Elon Musk, the owner of several companies, he has Tesla and SpaceX and Boring Company. But let's focus on Tesla here because of what just happened. Elon Musk actually went and kicked off Bill Gates on the world's most, richest billionaires list. And Bill Gates was number 2 behind Jeff Bezos. Now Elon Musk is number 2 because his wealth is increased such a crazy amount just in a year that he's pushed Bill Gates back down to number 3. So part of this is because Tesla's stock has been hitting all-time highs. And they just recently got added to the S&P 500. We talked about that in some of the other videos. This is significant because there's about $11 trillion in index fund investing that is involved with the S&P 500. So when a company goes in there, there's a lot of different companies and funds that have to now go and buy that company's stock. So if you look at in 2020, Elon Musk added $100 billion to his net worth. That comes out to about $13 million an hour. Why don't they just make that the minimum wage? That would be nice. So now if you look at it, it's like he went just in the past few months and increased it $7.2 billion. So he's now worth $128 billion. That's pretty incredible rate of growth right there for him. A lot of this also comes from pay options with Tesla that were given out by the board of directors where they said, if the stock triples, we'll give you all these extra bonuses. And those were kind of stretch goals, you would think. But what ended up happening was Tesla's stock actually sextupled in this year alone. And because of that, he's also getting all these options coming up and he's making all these extra pay packages. So that's how he can also make a lot of the money there. Jeff Bezos is still around $181.4 billion, and Elon Musk is at $128 billion right now. So there's still a significant difference there. And if you look at what Bezos has done in the past year, with Amazon faring very well during the pandemic, he made about $67 billion increase to his net wealth just in 2020 alone. Part of this is also that we're seeing a disconnect now between fundamentals and what the market is doing. We're seeing stocks like Tesla, which are trading at all-time highs and trading at over 100 times the projected earnings for 2021. And yet, it seems like nobody's selling them. They're still going up. They still continue to increase in price. And if you're looking at that, Tesla, when they were coming into the S&P 500, they were supposed to be like the 8th or 9th largest company. Now they're going to be like the 6th or 7th. I mean, it just keeps increasing to the point where they're one of the largest companies in the S&P 500 now. Speaking about like the vehicles with Tesla and everything, you also have the company Government Motors, or General Motors rather. General Motors is doing a giant recall of vehicles here. A lot of them had these Takata airbag inflators, and there's this giant recall on all these pickup trucks and SUVs and everything. It looks like 5.9 million sport utility vehicle and pickup trucks will now be recalled. To give you an idea of how massive that recall is, Tesla in its entire existence hasn't sold 5.9 million vehicles, and GM's doing a recall on that many. Pretty crazy there. We talked earlier in earlier videos about the movie theaters and how they were faring during the pandemic and trying to secure funding. Well, some good news for Regal Entertainment Group, and they own Cineworld Group, which is a lot of the movie theaters in, say, England. They're actually the second largest after AMC for movie theaters around the world, ownership of movie theaters. they secured a financial lifeline from creditors. So it looks like they may be able to survive this here. The lifeline is about $450 million loan to get through everything that's coming here. They have to be able to survive, right? But there's also contingency for an additional lifeline of $750 million in extra liquidity if it's needed. So this is great news for the company. It really gives them the potential to last out this pandemic. We saw some of the cruise lines like Carnival and Norwegian. They were trying to issue shares and do debt offerings to try and raise capital. All these companies, because the environment for raising capital is so easy right now with easy money and low interest rates, they're able to raise these funds to get through the pandemic. And since this company was traded on the London exchanges, it was up 20% on the news.